Hello and welcome to the day ahead. It is Thursday, June the 16th. I'm Andrew Gagan. Well, to the story that will dominate today, and as expected, the US Federal Reserve has hiked benchmark interest rates by 75 basis points, with just one dissenter, Esther George. The move marks the Fed's biggest single meeting move since 1994, as the central bank continues to battle 40-year high inflation.
Data and also some data on inflation expectations late last week, and we thought for a while, well, this is the appropriate thing to do. So then the question is, what do you do? And do you wait 6 weeks to do it at the next meeting? And I think the answer is that's not where we are with this. So we decided we needed to go ahead.
Looking ahead, Chair Jerome Powell warning of a slowdown in the months ahead, with the all-important dot plots showing inflation forecasts have lifted, growth estimates trimmed, and projections for the unemployment rate revised higher. And when it comes to the path of policy, Jerome Powell again expressed flexibility in what the Fed would do at upcoming meetings, reiterating it would be data dependent, though stopped short of giving a specific number.
You know, I'll just say we're going to react to the incoming data, and appropriately, I think. So I wouldn't want to put a number on what that might be. The main thing is to get rates up, and then pretty soon we'll be in an area where we're, I think, as you get closer to the end of the year, you're in a range where you've got restrictive policy, which is appropriate. 40-year highs in inflation. We think that policy is going to need to be restrictive, and we don't know how restrictive.
Well, sticking with the guidance, given the decision to hike rates by 75 basis points rather than 50, which had been communicated explicitly prior to the meeting, Jerome Powell was understandably grilled by journalists asked if the latest about-face will make forward guidance a less effective tool. In response, he said while monetary policy works best when transparent, there is always a trade-off.
You have to live with that guidance, and so you do it, and it helps a lot of the time. I frankly think this year has been a demonstration of how well it can work. Any guidance that we give is always going to be subject to things working out about as we expect. And in this particular situation, you know, we're looking for something specific, and that is progress on inflation. And if we don't see that, then that's the kind of thing that will cause, even if we don't see progress for a longer period, that could cause us to react. I would like to think, though, that our guidance is still credible, but it's always going to be conditional on what happens.
So let's see how the markets reacted to the Fed's move. Wall Street initially rallied to close higher. However, those gains were later paired as investors considered more rate hikes to come. The S&P 500 snapping a 5-session losing streak, while the Dow Jones and Nasdaq also closing higher. Stocks, specifically banks, were the biggest winners from the Fed's move. Citi shares climbing off the back of news the unit's second quarter revenue should increase north of 25%. Meanwhile, Boeing shares surging almost 10%. And after China Airlines conducted test flights with a 737 MAX for the first time since an earlier model crashed in March this year. And the flight signalling a possible rebound in demand as Shanghai emerges from a 2-month lockdown. Well, to the macro end of town, after the Fed's rate hike, US 2-year Treasury yields fell from 3.39 to 3.19%, while the 10-year fell from 3.44 to 3.28%. And Australian 3-year government bond yields, the futures there falling from 4% to 3.77. And the US dollar was mixed against other major currencies, the Aussie dollar surging around 2%, taking it above 70 US cents. And earlier economic data showed US retail sales unexpectedly fell 0.3% in May, driven by a fall in motor vehicle purchases, which declined amid record high fuel prices. And in the Eurozone, the central bank announced an out-of-schedule General Council meeting to discuss policy normalisation, the rapid shifts in yields, and the risk of greater fragmentation in markets. Well, greater certainty among global investors in the wake of the Fed's decision is likely to be welcomed by local investors. ASX futures up around 0.25%. Global oil prices have fallen sharply on concerns that more aggressive monetary tightening will slow economic activity and curb demand for oil. Brent crude down more than 2%. Iron ore futures price fell 2% in fact, while base metal prices were broadly higher, with tin reversing losses up more than 4%. And gold futures price climbing around 1/3%. And Bitcoin initially fell in response to the Fed's move and is trading at around 22,000 US. And that is the day ahead. We'll see you again tomorrow.